South Africa's third largest gold producer, Harmony Gold, posted a more than threefold increase in quarterly earnings, beating expectations on bullion's record run. Headline earnings per share soared to 95 cents in the first quarter. Joining us now in studio is the CEO of Harmony, Briggs. Thank you so much, Graham, for joining us today. Congratulations on your numbers. A very strong set of results that have come through. We've seen a 45% increase in operating profit that came through to 1.3 billion rand. Take us over the period that was, because obviously a much higher gold price has resulted in strong numbers for Harmony.
Yep, high gold price, but also much higher gold price in rand terms. So, but this is what you're going to find with this, sudden change is 20% increase in the gold price in rand terms leads to that sort of increase in profit. So, the increased profit just goes straight down to the bottom line.
Papua New Guinea, Hidden Valley, of course, assets. This is what a lot of people have been focusing on, and of course the investor community have really been hinging on prospects for Harmony to do really well there. You've got a 50% stake there. Give us an indication on production thus far. We know that has also been increasing and it's ramping up extensively.
Hidden Valley is looking good. It went through some overland conveyor issues, so it couldn't get its throughput, but throughput this quarter should be back to where it should be. But the good news on that is also Wafi-Golpu, because that's such a great asset, copper gold asset, and it's on its pre-feasibility, and it's looking very good. All the drilling and everything we're doing so far is confirming the resource numbers. So looking great in PNG.
With regards to the copper find, we know that a lot of people say that it's the find of the century, 16 million ounces of gold and 8 million tons of copper. When do you expect to actually see those numbers coming to fruition?
Let me correct those numbers. It's actually just over 26 million ounces of gold and 9 million tons of copper. And it's growing. Most of the work we've been doing now is really confirming that number. But it's on a belt where we're certain to find more. So it's a case of doing that. We've been so busy doing the pre-feasibility study, we've had rigs just tied up with that. So it will prove up some more, but it's really focused on getting that feasibility so that we can get into production sometime in the future.
Are you concerned about the costs that are going to be involved in
no,
pulling the resources out of the ground?
No, not at all. I mean, the capital costs are going to be quite high. They are for a mine like that. And you're talking about a mine which has got a mine life of 30 years, big production. These are long life assets. So you would expect some fairly substantial capital costs with lower operating costs. I mean, it's just going to have a great operating, it's going to be first quartile copper costs, or it's going to have negative operating costs in gold terms. This is the nature of the beast with such a big ore deposit.
I'm sure this has been asked to you quite a few times with regards to splitting South African assets and offshore assets. Is there a consideration in this regard?
No, there isn't. No, I mean, it's right now it's Harmony's advantage to stay as it is. Huge potential in Papua New Guinea, huge potential here in South Africa in our build-up of operations. So we're quite happy with the way it is at the moment.
Your cash costs over the period only increased just below 4%, sitting at $1,156 an ounce. The same period a year ago, $974. Is this going to now, are we going to see a stabilization?
Well, we're going to see improvement in cash costs. As our production ramps up in South Africa, so we'll get more gold for the basically same people producing it. The assets are planned to ramp up in production. The growth from Doornkorp, Kasasole to Pakisa and also Hidden Valley, of course, are going to increase. So, we're going to have more gold for basically the same costs.
With regard to the same costs, so you're not expecting a significant improvement, just a ramp up in production?
Well, there's always going to be some increase in costs. Obviously, we've got these electricity costs. If you look at the next quarter, electricity costs are going to be cheaper than it was last quarter because we don't have winter tariffs. But, there's these fluctuations in costs. But essentially, our cash costs in unit costs are going to decline.
Of course, you saw the interview a little earlier with Sasha Norishkin, really pointing out the fact that we've seen a significant increase in the costs for Harmony and a significant decline in production. Any chance that we can actually get it back to the levels that we saw in 10 years ago?
Well, we're talking over a long period when Harmony bought a lot of assets from other people and actually mined them out. So mined those assets to the end of their life, and they've closed. So a while back, some time back, we were producing over 3 million ounces, and now we're producing last year 1.3 million ounces. So it's essentially a different company, but we've invested a lot of money into operations which are not necessarily deeper and, like he's saying. And essentially, we're creating a new company going forward. So one can look back, but essentially a lot of these operations do close as you deplete ore deposits.
What is your sense with regards to being a South African gold miner and of course diversifying outside of South Africa's borders? They say that gold mining in South Africa is reaching an end. Would you agree with this? Do you think that we still can have a very competitive gold mining industry despite the fact that we have a lot of challenges?
Yeah, I'm sure we can. We've got a good future, I think, in South Africa, and you know, it certainly shows itself when you have changes in the gold price like we did with the exchange rate changing. Now, I think South Africa's still got a great future in gold mining, but obviously as a company we need to diversify as well and spread our risk.
With regards to the revenue mixes, with regards to South Africa and obviously looking offshore as well, how do you expect that to play out going forward? Of course, South Africa is still accounting for 93% of revenue so far.
Yeah, it will, but you know, in 20 years' time, when Wafi Golpu is a significant producer, it will obviously be a massive amount of revenue compared to South Africa. So, you know, our fortunes will change in time. But we will still have significant production from South Africa and therefore significant revenues.
A couple of months ago we saw the gold price hitting an all-time high of $1,920 a fine ounce. Subsequently we've seen some resolution coming through in Europe and a much softer gold price. Is there concern that if we don't see more drama emanating from the Eurozone and Europe that gold is going to plunge? What is your sense?
No, not at all. I think gold is still a fundamental currency. It's a fundamental future of the various investments and going forward it's going to have important significance, and we haven't seen central banks sell gold. That would certainly be raising the alarm bells. People are holding and hoarding their gold. If you look towards Asia, you'll see people haven't got the scrap gold sales. If you look to Europe, there's a lot of scrap gold, which means that people are a bit worried and they're trying to create a bit of liquidity. So it really depends where you are in the world, but generally in the world people are still very much in favour of gold, and I can see it going up.
Fantastic, Graham. Thank you so much for joining us. Great to have you on the programme. Graham Briggs, the CEO of Harmony.